Bitcoin, guys. Bitcoin is down again today. This is another good example of people that they let emotion take over. And they say, oh, well, now, it's up this much. It's going to go up to 250,000 by, June or July. In reality, I've kept you guys, if you've been following here, I've kept you logical and data-driven.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Gareth Soloway breaks down how institutions are dumping on early Bitcoin buyers, causing markets to tank.
The 10-year yield chart, you can see this is the daily chart of the 10-year yield. It is still up at around 4.697%. But if we go to the 10-minute chart, this is where that ADP private sector number came out, and we can see yields have fallen from that point. So, again, that's why markets have caught a little bit of a bid. I wish it was more complicated than that. It is just what it is. The markets are getting very nervous about yields that continue to go up. Now, if we look at this chart, I still have my max move on the 10-year yield. If we go back to the daily or the big board here, the big board is telling us based on this trend line here, right through here, and here, here's your breakdown. Remember scene of the crime retrace, right, where you break a key trend line and you come down. There's this weird magnetic effect where it wants to draw it back to that level. So we have double top. That'll be resistance. You have the scene of the crime, this trend line here. If we get to 5%, I'm going to short the heck out of 10-year yields. Like I said to you guys, I think in yesterday's Trading the Close, it would be done by essentially buying TLT or adding to TLT. I already own a little bit of TLT, but I want to aggressively pick it up. And I'm going to tell you why. The yields going up is putting more pressure on the economy. The economy now is at the late stages of a bull market. It's eventually going to have a recession, especially if there's any government spending cutbacks in the next administration. Very, very likely we'll see that recession. The second we see weak economic data, which could be as early as Friday with the jobs report, we'll have to see, yields will start to turn back down, and I have a longer-term projection of yields coming back to about 3.3%. Now, listen, 3.3 doesn't bring us back to COVID lows, right? But those days are over, especially with the amount of debt and inflation that we're seeing. But this would still be a massive gain on the 10-year yield, or drop on the 10-year yield, massive gain on TLT. But again, the question is, do we get to 5% first? That's what the charts are insinuating is very, very possible. All right, next up, let's go to some of these other charts here. Tesla, guys, again, beautiful little sell on Tesla yesterday. Looking here, we can see that initially it was down sharply this morning pre-market. It has now rebounded and is basically almost back to the flat line here within $1 or so. Next up, let's take a look here at NVIDIA, which just got crushed yesterday, guys. And again, I talked about this level. We talked about this in members, the memberships and everything like that, as well as in a lot of the free content here, the shows and so forth. But you can see how that level was right here. High pivot, pierced it here. You have your double top, and yesterday we ran into it. Now, again, the kicker here on this chart is very simple. This is a multi-factor. Remember, we just talked about how on Coinbase we were looking for two lines that crossed or met. Well, guess what? What did we get yesterday right there? Two lines, double top, upsloping trend line, boom, X marks the spot. Look at the sell-off. Now, on a technical analysis basis, you get a candle of this magnitude, the wide range red candle, that is a top until proven otherwise. Doesn't mean it can't be proven otherwise. It just, as a trader, you don't have the luxury to say, well, maybe it'll break it, maybe it won't. No, it is what it is until proven otherwise. And right now, that is an absolute top right there. Beautiful level, wide range engulfing reversal candle. Notice how the previous update got engulfed. It opened above, it closed below. That is a fully engulfing candle. That is about as bearish a signal as you can get. Now, it doesn't mean that NVIDIA is not going to bounce today. There's still plenty of buy the dippers out there. Those of you watching, you might be a little bit wiser than the retail general public. That's fine. That's great. But again, retail is going to say, wow, look at this discount. I'll buy. It's going to create most likely maybe a bear flag. Bear flags are slightly more buyers than sellers. It's consolidation. It'll eventually lead to a move down. Where's your next support? 135. That would be your next target level, maybe a day trade in the Apex Live day trading room.
Robert Kiyosaki, the celebrated author of Rich Dad Poor Dad, recently took to social media to share his enthusiasm for Bitcoin, despite its declining price. He tweeted, "Bitcoin crashing. Great news. I continue buying Bitcoin because Bitcoin crashing means Bitcoin is on sale." His message underscores a central principle in investing: capitalize on market downturns to accumulate assets at lower prices. Kiyosaki's bullish stance on Bitcoin is driven by its inherent scarcity. With fewer than 2 million Bitcoins left to be mined out of the total 21 million supply, he believes the cryptocurrency's value will only increase over time. For Kiyosaki, the mantra of buy low and HODL is more than just advice. It's a strategy for long-term wealth creation. As market volatility persists, his unwavering confidence in Bitcoin highlights its potential as a hedge against economic instability and a key asset in the portfolios of forward-thinking investors.
And we've talked about this. And again, not to be a broken record, but that's your line of resistance. That's your line of support. As far as I'm concerned, it could do this. Eventually, it's going to break one way or the other. But as long as it's in this range, it's just chopping people out. It's luring suckers in, and then it'll flush them out to the downside, and vice versa. It's luring bulls in, and it could flush them out when it pops, or I should say luring bears in, and it could flush them out to the upside. Know your levels. If you know your levels, all of a sudden you stop thinking with your emotion, and you start thinking with probability. And that's the game changer for investors. And again, I love the comments about how so many of you guys have improved your trading from watching and learning from these game plans and trading the closes. That's really our goal here. All right, folks, again, I love seeing that. It drives me to be even better on a daily basis on these game plans to really help you guys hone your skills and essentially compete and beat the institutions. Because it's, again, remember, generally the markets are a zero-sum game, right? If there's a seller, and there's got to be a buyer. And so someone's selling and someone's buying. So someone's exiting and taking profits or whatever, and someone's buying and hoping it goes up. The other people are thinking, okay, it's topped out. So you're versus trillions of dollars from institutions as retail investors, and we have to be stepping up our game, or they're just using us as retail investors to funnel profits from our pockets into their pockets. That's what in general they do. They love it when people are emotionally driven. They take advantage of that. And the whole idea of verified investing, data driven, everything data driven. Shut that brain off. Don't think about it. It's what is the chart telling us? The chart tells us what was most likely to happen. Doesn't mean it's always right. It just tells us what's most likely to happen. All right. So Bitcoin, we have support at 92 right here. We have resistance right around 104 to 105. Those are your levels to watch. Again, notice how yesterday the stock market dropped sharply. What did Bitcoin do? It went down. The previous days the stock market was up. Bitcoin went up. My point being is that it is still a risk asset. As much as many of us would want it to be that digital gold, it is not quite there yet. I think in 5 or 10 years it probably is. It just has to mature into that asset.
Bitcoin has experienced a sharp 14% decline from its recent record high, now teetering around $93,000 as market analysts eye the critical $90,000 level for potential support. Over the past 4 days, the cryptocurrency has dropped more than 8.5%, sparking concerns about whether the current price represents a local top or a prelude to further declines. Analysts suggest that Bitcoin's next significant support lies at $90,000. According to Alpha PC, Bitcoin has already breached the $97,000 to $95,000 support zone, leaving $90,000 as a key area to watch. Should this level fail to hold, Bitcoin could slip further, targeting $88,600 or even $87,500. Other experts like Michael Van de Poppy foresee the asset dipping into the $85,300 range before bouncing back. Additionally, CryptoQuant's Julio Moreno highlights the declining unrealized profit margins on-chain, suggesting this correction is a natural consequence of Bitcoin's recent rally above $100,000. From a technical standpoint, the formation of a head and shoulders H&S pattern on the daily chart has alarmed traders. Veteran analyst Peter Brandt warns this could drive Bitcoin down to $73,000. If the $90,000 level crumbles, Bitcoin's descent could intensify, challenging the resilience of its long-term bullish trajectory. Peter Schiff, CEO of Europac, recently dismissed the notion that the U.S. government might buy Bitcoin, despite Donald Trump's earlier promises. Schiff's skepticism highlights a significant point of contention within the financial and crypto communities. Before his historic 2024 presidential win, Trump had pledged to establish a national Bitcoin reserve. This promise, seen as a nod to crypto advocates, initially fueled market speculation, with many expecting Bitcoin's value to surge further in 2025. However, Trump's administration has yet to make any moves toward purchasing Bitcoin. Instead, his current strategy appears to focus on retaining Bitcoin seized from criminal activities, such as the assets confiscated in the Ross Ulbricht case. This tempered approach leaves open the question, will the government buy Bitcoin as Schiff insists it won't? Wyoming Senator Cynthia Lummis, a staunch crypto supporter, offers a counter-narrative. She has proposed an ambitious plan for the U.S. government to acquire 1 million Bitcoin over the next 5 years. If her proposal gains traction, it could usher in a dramatic policy shift. If you've been with us so far, a big thank you. Don't forget to subscribe for free to BitcoinZella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.